It's Robert Miner with Dynamic Traders Group with a DT trade tutorial video follow-up to the one that I did yesterday. And I'm recording this on Thursday, September 5th, about 2:45 in the afternoon. The markets aren't quite closed, but I'm going to follow up on the specific momentum and trade strategies. We'll call it part one I did yesterday, where we looked at a couple of markets for potential trade setups. And we're going to follow up on those two markets, and I'm going to do another short video tomorrow to follow up so we can look at it 3 days in a row and how, as a market unfolds, we might have to alter our trade strategy slightly, but the basic concept's going to remain the same. So let's take a look at the ES. So here's the ES daily data, and this is through daily bars through the end of the day yesterday, where we had kind of a sharp up day, but we did make a daily dual look back momentum bear reversal, so that was significant technical factor, and we had a high to high to high as of yesterday, September 4th. That was based on high close, the high close, high close. There are a couple other time factors that came in on the 3rd. So we know a couple of things. We know, number one, and because this is kind of focusing on momentum and multiple time frame momentum, most importantly, we know that the daily momentum was in a position from where daily highs are typically made. And as I mentioned yesterday, just because it makes a bear reversal doesn't mean we've got a price high, but we know we should be within a bar or two of that high. So the way that I usually phrase it in the reports is that the upside should be relatively limited before we complete a daily high. Of course, the daily high is the type of high following a daily momentum bear reversal. Sometimes that quote-unquote daily high is just sideways, but as I put in the report, usually sideways to down. If anything, it's not a time to initiate a long trade, and it could be a time to look for a short trade. And that's what we did in yesterday's video. We went to the intraday data, identified a minor swing low, and that if the market were to take that out, more than likely that would be the top of at least a daily high. Well, that didn't happen today. Let's just add today's bar up through now, and we'll look at some intraday data in a minute. We had another pretty substantial update today. But what's significant is now we've just completed, well, we haven't finished the day off, but we almost have completed day 2 of being dual look back overbought. And even though yesterday we made a bear reversal, is today we went, well, again, we haven't closed yet today, but if we close somewhere near where the market's at now, we will have made a bull reversal in the overbought zone. Just means there's a second day of dual look back overbought. We don't lose sight of the fact that this is at an extreme momentum from where at least a daily high is made. We know that we had a couple time factors in the last couple of days that were fairly significant for making a daily high, so we're 1 day past that. Big deal, 1 bar past it. We did exceed, and we have exceeded this double top anyway, which was around the 62% retracement, and right above it, right where today's high end, this is now where it becomes really significant. Is that the 78.6% retracement? It's the 127, 162% retracement of this 1 day decline, which I got labeled as a wave 4. This is almost a perfect 1, 2, 3, 4, 5. I'm looking at this. This is a possibility. This is in a legitimate, very possible wave count, an A, flat A, B, C, B, 1, 2, 3, 4, 5 to complete a C, to complete an A, B, C. What's also significant about the price area that it's in right now is the 100% alternate price projection of the range of what I've labeled an A from the wave below is right in that 127, 162% external retracement zone. So it's 100% alternate price projection, it's a 78.6% retracement, and it's the 127, 162% external retracement. So this is where the high is today. Look at that, it's also right at the parallel channel line, resistance channel line, very typical in Elliott wave. If you think you got waves 1 through 4 complete, draw a line 2 to 4, a parallel line from the wave 3, and that's very typically an end of wave 5 target area. So boy, that looks pretty good. Um, Again, we've changed the wave count a bit, but now it all fits together. I don't know if this is what it is. I don't know if it's going to complete an ABC. Once again, I'm just looking for the end of this wave C. And by the way, the same strategy that I'm using to enter a short trade is the strategy you'd use to exit a long trade, because we're at an extreme. So this is a significant trade strategy here. So let's go back to that 60-minute data. And here we are, right in here where I've got my arrow. That's where we were as of the end of the day yesterday. So I was looking at this as a 1, 2, potential 3, little ABC for a 4. And of course I had the 127, 162% external retracements, this little ABC, for a potential end of wave 5. And well, we shot way beyond that overnight. This is like a 10 o'clock at night bar. This is 4 o'clock in the morning, Eastern Standard Time. So when we come up to this is the first hourly bar of the day, we continued higher to a new high. And this is where, let me add all the data on there. This is what I'm looking at now. It's a possibility. It's a 1, 2, 3, 4, and a 5. And it's a good possibility because the daily momentums are now second day dual look back overbought. That's significant. 127, 162% external retracements. Those are the same ones that were on the daily chart. And if, again, it's always if this is a 3 and a 4, there's the 127, 162 of 4. So it all seems to fit together pretty well. And we should be at these extremes given that the daily momentums are dual look back overbought. So even if we continue to trade higher, keep in mind we're at extremes. So we're looking for a setup to either exit if you happen to be long or enter if you want to get short. And I want to get short. We just haven't had the trigger yet. And remember the video a week ago, I think it was last Saturday, that we did for the August 31st report. It was entitled Trade Don't Forecast. Okay, and that's what we're doing now. We're not forecasting a top at a certain time and place. We're recognizing that we're at extremes of time, we're at extremes of price, and we have a potential dual time frame or 2 degrees of pattern to indicate that we're right, almost right there now, if not right there as of today, for a wave 5 of 5. You know, I could easily see it go up to one more high to complete. Let's just look at this. I get a little nervous when I start getting multiple degrees of wave counts on 24-hour intraday data, especially when we get down to below the 240-minute data. But I like to do it anyway just for potentials, to recognize potentials. Might have a little bit higher before we complete. But here's what I know, and here's what we make trading decisions on. I know that we're a day past the ideal 2-day time period to complete a daily high. That's a high comparable to these highs. And these highs were only a couple of days sideways to down. Pretty significant declines, though, in those couple of days, from the high to low at least. And there were great setups for short trades. They just didn't have any follow-through. And that may end up being the same situation here. But as of this time, one thing that's different is the pattern. And now the pattern is very clear a possibility of an A, B, C, and a C, because this is a clear 5 wave. Now that doesn't mean, again, that's not going to go higher, but I recognize dual look back, daily overbought. I recognize the price position here. I recognize we're just a day off of an ideal time target to complete a daily high. And I recognize it has the potential that this to complete a correction. The potential for it. I don't know if it's going to do it. I just want to enter the trade for a potential 2 or 3 or 4 day trade, and then we'll assess that if it has the potential to continue on a higher time frame later on. Back to the 60-minute data. Well, what's the brain dead answer here is that there's today's low, and that was an overnight low or early morning low, however you want to call it, is certainly we take that out, we've completed this advance, at least this daily advance from the September 2nd low. Do we have a closer in signal? Yeah, let's go down this 15-minute data. And we got a pretty well defined low that was made just before the open, active trading open in New York at 29.61. In fact, we can put this, that would have been the first bar of the 15-minute bar of the day. A decline below 29.64.50. From my point of view, indicates that that daily high is complete and is certainly a go short setup. What if the market continues higher? Well, if it continues higher, let's just say we get above 29.86, whether it's before the close today or overnight, at least before tomorrow morning. Well, we've got a swing low that's even closer. Right now, given the extremes of all technical factors, we just keep advancing the entry point closer to the market. And if you're not looking intraday to enter, the simplest trigger is simply a lower close. And that's it. By the end of the day, any day, whether it's tomorrow or Monday, any day at this point where we make a lower close, that's a setup on the close to go short for at least a probable 3 to 4 or 5 day sideways to down, which may morph in to being a much higher time frame A, B, and C. So that's the specific trade setup that we're looking at for tomorrow. It may occur, it may not occur. If it does, either we take out a minor swing low during the day or we get a lower close. That's all out short signal. If it's not made tomorrow, we'll look at the same conditions for a setup on Monday, because the fact is we're near an extreme for at least a daily high, which may end up being a weekly high. Let's take a look at one more market.